Hello students, welcome to my channel KT's Commerce Classes. Today we will explain proportionate capital contribution under admission of a partner. Part 5. P and S are the partners sharing profit and losses in the ratio 3:2. On 31st March 2019, their balance sheet is as under. Two partners, capital P 2 lakhs, capital of S 1 lakh, total 3 lakh. Workman compensation reserve 10,000, creditors 40,000, total liability side 3,50,000. Now asset side, goodwill 15,000, land 1 lakh, building 80,000, debtors 1 lakh, less provision for doubtful debt 15,000, total 85,000. Stock 35,000, bank 30,000, advertisement suspense 5,000. Total asset side 3,50,000. On 1st April 2019, they agreed to take G as a partner of the firm under following terms. The new profit sharing ratio between P, S and G will be 5:3:2. So what is given in the question? Given in the question, old ratio of P and S, how much? 3:2, and new profit ratio between P, S and G 5:3:2. When these two data given, what to find out? First we have to find out sacrificing ratio. Calculation of, this is working notes. Calculation of sacrificing ratio. P's old share 3/5 and S old share equals to 2/5. Now new ratio between P, S and G given 5:3:2. P's new share equals to 5/10, comma, S new share equals to 3/10, and new partner G's new share equals to 2/10. Now we know that sacrificing ratio equals to old ratio minus new ratio. Now P sacrifices old ratio of P, how much given? 3/5 minus 5/10 equals to LCM will be 10, it will be 6 minus 5 equals to 1/10. S sacrifices two by 5 minus 3/10. LCM will be 10. 4 minus 3 equals to 1/10. Now sacrificing ratio between P and S equals to 1/10 is to 1/10 equals to 1:1. So we got the sacrificing ratio between the old partners 1:1. Now adjustment B, what they are telling, G will bring 1 lakh as his share of capital Adjustment C. G brings in 60% of his share of goodwill in cash. That goodwill is valued at 2-year purchase of the last 3 years. Average profit which were as follows: 2016-17 profit was 55,000, 2017-18 profit 65,500, and 2018-19 profit is 59,500. Next adjustment given: stock was found overvalued by rupees 5,000, building was found undervalued by rupees 20,000, and provision for doubtful debts is to be created at the rate of 10% on debtors. Next adjustment given: claim on account of workman compensation is rupees 2,000. Now workman compensation reserve, how much given in question? Already reserve created 10,000, but claim arise, how much claim arise 2,000. Journal entry for workman compensation reserve: workman compensation reserve debit how much? 10,000 given to workman compensation claim liability arises 2,000, that is the workman compensation claim. Remaining workman compensation reserve 8,000 will be distributed among the old partners in what ratio? Old ratio. To P's capital, to Q's capital. We know that any fund arise in the question will be distributed among the old partners in what ratio? Old ratio. Old ratio how much given? 3:2. 8,000 divided by 5, it will be 1,600. 1,600 into 3 means 4,800 or 3,200. This is the journal entry for workman compensation reserve to workman compensation claim question or adjustment telling 2,000 remaining distributed among the partners. Next, last adjustment question telling capital account of the partners is to be readjusted on the basis of their profit sharing ratio, and any excess or deficiency is adjusted by payment or receipt of amount. What are the question we have to prepare? We have to prepare revaluation account, partners capital account, and the balance sheet. Now we should find out calculation of goodwill and new partner share. New partner is G share. Now question telling goodwill is valued at 2-year purchase of the last 3 years average profit. First we find out total profit. Understood, student? What to do while finding out valuation of goodwill? If profit given, we have to add all the profit to find out total profit. So total profit equals to 55,000 plus 65,500 plus 59,500 divided by 3 equals to 1,80,000 divided by 3 equals to 60,000. Now goodwill is how many year purchase? 2-year purchase. Right. Average profit, or first we should do total profit. Total profit equals to how much? 1,80,000. After adding all the profit, average profit equals to 1,80,000 divided by 3 equals to 60,000. Goodwill equals to how many year purchase? 2-year purchase of 3 years average profit. The average profit is how much? 60,000 into 2 equals to 1,20,000. So value of goodwill is how much? Value of goodwill is 1,20,000. Now we have to find out G share equals to 1,20,000 into 2 by 10. So G share will be how much? G share will be 24,000. This is the premium money G has to pay, but G brings how much? 60% of his share of goodwill in cash. G pays 24,000 into 60%. 14,400. G not paid total amount G has to be 24,000 minus 14,400 equals to 9,600. G not paid how much? 9,600, and G pays how much? 14,400. Now what to prepare? We have to prepare revaluation account. Stock was found to be overvalued. Overvalued means stock is excess valued. We have to reduce the value. Reduce the value means asset reduced. So asset reduced. Which side we should record? We should record revaluation debit side. To stock, how much it should be reduced? It should be reduced by 5,000. Question telling building was found undervalued. Undervalued means it is less valued. We have to increase the amount. When asset increases, revaluation credit side we should write the amount. It will be 20,000. Provision for doubtful debt created 10% on debtors. Now debtors given 1 lakh, 10% means 10,000. Now previously provision 15,000 was there. Now it is becoming 10,000. So 5,000 provision to be credited to revaluation account. By provision for doubtful debt, $5,000. No other entry is there. We should close the book. It is becoming 25,000. 25,000. Credit side greater than debit side, that is revaluation profit. Transfer to P's capital, S capital. In what ratio they should distribute? They should distribute in the ratio 3:2. So P share will be 3/5 and S share will be 2/5. It will be 12,000. It will be 8,000. Now revaluation account is over. We should proceed with partners capital account. Partners capital how much given in question? P's capital given 2 lakh and A's capital given 1 lakh. Now revaluation profit will be transferred to partners capital account. It will be by revaluation 12,000. It will be 8,000. Next, new partner introduce fresh capital. Entry will be bank account debit to new partner capital. Now premium bought by new partner. How much? We know 14,400 will be distributed in what ratio? Sacrificing ratio. 14,400 sacrificing ratio previously we calculated, that is 1:1. So it will be 7,200, 7,200. New partner unable to pay how much? Unable to pay total amount 24,000. Share 14,400 able to pay, unable to pay 9,600. So 9,600 will be distributed between P and S in sacrificing ratio. Sacrificing ratio is 1:1 by G's current account. 4,800. 4,800 dash. Now workman compensation reserve. Previously we did the entry transfer to partners capital. Workman compensation reserve account. Compensation reserve account, how much will be distributed? 4,800 for P and 3,200 for S. Now advertisement suspense given in the balance sheet, that should be written off. Among old partners in what ratio? In old ratio. $3,000, $2,000. Now goodwill given in the balance sheet, that also to be write off. That also to be write off. Goodwill, how much given in the question? Goodwill given in the question 15,000. That should be write off in old ratio. It will be 9,000, 6,000, 9,000 and 6,000. Old ratio is how much? 3:2. Now we have to find out proportionate capital. What is proportionate capital? Capital according to new profit sharing ratio, taking base new partners capital. Taking base new partners capital. Now capital of new partner is how much? G share. Working notes. G share equals to how much? 2/10. G share 2/10. G is capital. equals to rupees 1 lakh. Equals to rupees how much? 1 lakh. For 2 by 10 share, capital rupees 1 lakh. For 1 share, capital will be how much? Capital 1 lakh into 10 by 2 equals to, it will be how much? 5 lakh. This 5 lakh will be distributed in what ratio? New ratio 5:3:2. Now we have to find out P's capital, P's new capital equals to 5 lakh into 5 by 10. S new capital equals to rupees 5 lakh into 3 by 10. G's capital equals to rupees 1 lakh. Now 5 lakh into 5 by 10 will be rupees 2 lakh 50 equals to rupees 2 lakh 50. Equals to rupees 1 lakh 50. Now we got the capital balances, new capital balances. We should write two balance CD. It will be 2 lakh 50. It will be 1 lakh 50. It will be 1 lakh. Now we should close the book. We have to see which side is greater, credit side greater or debit side greater. According to the total, credit side coming 2 lakh 62. So which side is greater? After adding the debit total, it is coming 2 lakh 62. Which is greater than debit side? So new partner has to, that old partner has to invest money in business. When invested money in business, how much? The balancing figure. What we have to keep in mind, if debit side greater than credit side, the partner has to deposit money in business, and if credit side greater than debit side, partner will withdraw money from business. Now in this question, P invested fresh capital how much? Fresh capital 33,200. Now for S, total credit side becoming 1 lakh 58,000. Here also 1 lakh 58,000. Balancing figure will be 34,800. By balance BD, it will be 2 lakh 50. It will be 1 lakh 50. It will be 1 lakh. Now balance sheet as at 1/4/2019. Liabilities, assets. In liability side, first we will write capital accounts. Capital accounts. P, S, G. P how much? 2,50,000. S how much? 1,50,000. G how much? 1 lakh. Total becoming 5 lakh. Next one, workman compensation claim. Compensation claim. Claim. How much? 2,000. Next one, creditors. How much? 40,000. Now asset side. Asset side first will be land. How much? 1 lakh. Next one, building. How much? 1 lakh. 1 lakh. Next one, debtors. Debtors how much given in question? 1 lakh. Less provision for doubtful debt. Provision for doubtful debts. 5,000. Provision for doubtful debt 10,000. So result will be 90,000. Then stock. Stock how much given? 30,000. Then G's current account. Current account shows debit balance, that's why asset. How much? 9,600. Bank balance. Bank balance, what is the bank balance? Bank balance, opening balance given 30,000 plus capital introduction 1 lakh plus premium bought by new partner 14,400 plus introduction of further capital 3,200 plus 34,800. Total becoming 2,12,400. Balance sheet total will be 5,42,000. 5,42,000.